Welcome back to Investing Talk Podcast. Today we're zooming in on enCore Energy Corp,
Hmm.
a U.S.-based company focused on uranium resource development for clean energy. You send over some really interesting material covering their recent performance and technical analysis, and we're going to break it down to highlight what truly matters.
Yeah, our goal today is to synthesize the key takeaways from, the stock analysis on Nasdaq and TSXV, the company overview detailing their operations and recent financials, and that technical analysis report that outlines their price movements and key indicators.
Okay, so enCore Energy, uranium is their game, but what sets them apart and how they actually get it out of the ground?
Well, what's particularly noteworthy is their specialization in acquiring, exploring, and developing uranium properties, with a strong emphasis on in situ recovery, or ISR, technology.
ISR.
Yeah, this method is often touted for its lower environmental impact compared to traditional open pit or underground mining.
ISR. Interesting. So instead of the conventional methods we often picture, they're using this like in-the-ground extraction. Where exactly are they operating?
Their operations span across Texas, New Mexico, South Dakota, and Wyoming. And their overarching mission, which ties into the bigger energy picture, is to bolster domestic clean energy production through their focus on nuclear fuel.
That certainly aligns with the growing global conversation around nuclear power.
Oh.
Okay, let's dig into their recent financial performance. Fiscal year 2024 looks like it had some significant movements.
Absolutely. The 2024 financials reveal a substantial surge in revenue, reaching $58 million. That represents a remarkable 163% increase compared to 2023.
Wow.
And this jump was primarily driven by increased efficiency in their uranium extraction processes.
That's a huge revenue spike. However, I also noticed their net loss increased. What can you tell us about that?
That brings up a crucial point. While they saw impressive revenue growth, their net loss also widened to $61.3 million, up from $25.6 million in the previous year. Consequently, their loss per share increased to $0.34 from 18 cents.
So more money coming in, but even more going out. What were the main factors driving that larger net loss?
Well, the sources indicate that a key contributor was an increase in their operational costs. This could be attributed to the ramp-up of their newly commissioned Alta Mesa Central Processing Plant
Okay.
and potentially increased investment in exploration activities as they position themselves to capitalize on the current uranium market dynamics. It's also important to remember their profitability is somewhat tied to the spot price of uranium,
Right.
meaning fluctuations in the global market can impact their earnings alongside their contracted sales. Despite this, they ended the year with a healthy $39.7 million in cash and cash equivalents.
Okay, so it sounds like strategic investments for future growth might be impacting current profitability. Makes sense. Speaking of operations, you mentioned a new processing plant. That seems significant.
It is. The commissioning of the Alta Mesa Central Processing Plant in June 2024 is a major milestone. What makes this particularly significant is that it positions them as the only U.S. company currently operating 2 licensed uranium processing plants.
Only one.
The only one with 2 operational plants right now. Yeah, substantially boosting their overall production capacity.
Having 2 operational plants definitely gives them a leg up in terms of output.
Huh.
Now, I also saw they made a move to sell some of their assets in New Mexico. What was the reasoning behind that?
That was a strategic asset transaction. They entered into an agreement to sell their New Mexico uranium assets, specifically the Crown Point and Ambrosia Tree Line projects, to Energy Corp.
Yeah.
But this wasn't just a straight sale. enCore received an equity stake in Verdera as part of the deal, along with future royalty payments. So this allows them to retain some potential upside from those assets while focusing their immediate capital and operational efforts elsewhere.
That's a clever way to potentially benefit from those assets down the line without the immediate operational burden.
Smart. Let's talk about how they're actually selling their uranium. It seems they've secured some long-term contracts, right?
Their contract strategy appears to be a key element of their stability. They've secured multiple uranium delivery contracts with U.S. nuclear power plants that extend through 2029.
Through 2029. Okay.
This provides a predictable revenue stream for a significant portion of their production while still allowing them to, take advantage of potential increases in the spot market price for any uncontracted material.
That blend of guaranteed sales and spot market exposure seems like a prudent approach. Now they're actively branding themselves as America's clean energy company, highlighting their ISR technology. How do they stack up against their main competitors?
Well, their focus on ISR technology is a key differentiator in a competitive landscape that includes companies like Uranium Energy Corp and Energy. Uranium Energy Corp has a more diversified portfolio of projects across different locations, offering a broader operational
Right.
base.
Energy possesses significant uranium reserves, but their primary reliance on conventional mining techniques presents a different set of environmental and capital considerations compared to enCore's specialized ISR approach.
So different risk profiles.
Exactly. enCore's emphasis on ISR allows them to position themselves strongly in the, let's say, environmentally conscious segment of the market.
So each company has its own distinct strategy and focus. What are some of the clear strengths and potential red flags that emerge from the information we looked at regarding enCore?
Several strengths stand out. Their strong asset base, including those 2 licensed processing facilities, that's a significant advantage. Their strategic partnerships, like the one with Boss Energy, also provide valuable opportunities for collaboration and growth.
Okay.
However, the increased net loss despite strong revenue is definitely a red flag that warrants close monitoring. And additionally, their inherent sensitivity to the volatility of spot market uranium prices remains a factor investors need to be aware of.
Those partnerships can definitely be force multipliers, though. Looking ahead, what are some key things you'd advise someone to watch in terms of enCore's future? Any potential catalysts or looming risks?
Keep a close eye on their upcoming earnings reports. See if they can continue to ramp up production efficiently and begin to bring those operational costs under control. That's key. Also, any shifts in government regulations or policies that support domestic uranium demand could also act as significant catalysts.
Right, policy changes.
On the risk side, geopolitical instability and broader market fluctuations can always introduce volatility into uranium prices, impacting their profitability. That's just the nature of the beast with commodities.
Lots of external factors at play, as always. Okay, let's switch gears now and look at what the technical analysis is suggesting about their stock on both the Nasdaq Q and TSXV exchanges.
Yeah, the technical picture offers some interesting insights. Currently, the stock is trading around $1.33 on Nasdaq and $1.88 on TSXV. The positive revenue news we discussed earlier could certainly be contributing to positive investor sentiment reflected in these price levels.
And what about how actively the stock is being traded? Is trading volume a key indicator here?
Oh, absolutely. Paying attention to trading volume is crucial. Higher volume accompanying price movements can often signal stronger conviction behind those movements, whether upward or downward. Tells you if the market really believes the move.
Now let's talk about those moving averages we looked at. What trends might those be highlighting for investors, the 50-day and the 200-day?
Right. The 50-day and 200-day moving averages are key indicators of short-term and long-term trends, respectively. If the current stock price holds consistently above its 50-day moving average, it can suggest a building short-term bullish momentum. Similarly, if it remains above the 200-day moving average, that generally indicates a longer-term positive trend in investor sentiment. Basically, are the short-term traders and long-term holders feeling good?
Okay, so those can provide a sense of the prevailing direction of the stock price. What about the Relative Strength Index, or RSI? How can that help an investor gauge potential buying or selling opportunities?
The RSI is a momentum oscillator that can help identify if a stock is potentially overbought or oversold. Typically, an RSI reading below 30 is considered to be an oversold territory, which, some investors might see as a potential buying opportunity.
Potential dip buy.
Could be. Conversely, a reading above 70 might suggest the stock is overbought and potentially due for a correction, maybe time to take some profits or be cautious.
That gives us some potential guideposts for assessing the stock's momentum. Okay, considering all the information, the company fundamentals, the ISR focus, the financials, and the technical analysis, what's the overall recommendation or sentiment we're seeing?
Well, the overall sentiment surrounding enCore seems generally optimistic, largely driven by the potential resurgence of nuclear energy in the U.S., a sort of nuclear renaissance idea. For those who already hold the stock, a hold recommendation appears prudent given their recent revenue growth and strategic positioning within the sector. Let it ride for now.
Okay.
For new investors considering enCore, it might be wise to look for potential entry points if the stock price experiences a dip towards key support levels identified in the technical analysis, or perhaps if the RSI indicates an oversold condition.
Be patient, maybe.
Maybe, but, and this is critical, it's essential for all investors to remain vigilant regarding broader market volatility and overall economic conditions. Things can change fast.
So it's a situation with both promise and the need for careful monitoring. To summarize the technical analysis, what are the most important things for someone tracking this stock to keep an eye on?
From a technical perspective, closely watching the trends in the broader uranium market, both supply and demand globally, is paramount. Uranium price is key.
Makes sense.
Any significant changes in the regulatory landscape affecting nuclear energy in the U.S. will also be crucial. Policy matters a lot here. And finally, continued successful implementation and advancement of their ISR technology will be vital for their long-term operational efficiency and competitive standing. Does the tech keep proving itself out?
So you now have a comprehensive overview of enCore Energy Corp. You can see a company experiencing significant revenue growth and making strategic moves in a potentially high-growth sector, particularly with their unique ISR technology and expanding processing capacity. Lots going for it.
But, and it's a significant but, the increased net loss and the inherent volatility of the uranium market are definitely factors that require careful consideration. Can't ignore the risks.
Absolutely. The technical analysis offers some potential insights into market sentiment and possible entry points, but as always, it underscores the importance of doing your own homework, your due diligence, and being aware of broader market forces.
Ultimately, your individual risk tolerance and investment objectives within the clean energy sector should be your guiding principles in making any decisions. Is this the right kind of risk for you?
This situation presents both compelling opportunities and inherent risks within the energy market. A lot to weigh.
So, what resonates most with you from this overview? What further questions do you have about enCore Energy or maybe the dynamics of the uranium market in general? We encourage you to delve deeper into these areas.
And if you found this insightful, please subscribe, like, and comment to let us know what other companies or sectors you'd like us to unpack in future discussions. Thanks for tuning in.